Hi, this is Brian Sikorsky. I'm an independent financial planner and wealth advisor with Stratos Wealth Partners. This presentation that I pulled together is being done on the morning of Monday, November the 2nd. And it's a little bit different because it's really focused on almost exclusively a range of charts or graphs. Most webinars that I do have a lot of explanation behind them or may portray case studies, but this one's really just focused exclusively on the numbers as it relates to the election. And we're only like one day from the last of, I guess, in-person voting. So I pulled this together and I think you might find it interesting, and we'll see if some of these predictions and prognostications turn out to be true. So we see here it says LPL Research 2020 election charts. And this chart, number one, right here, shows which is it in October. October has been very strong for the market lately, but typically very weak during election years. And this is based off of Standard & Poor's 500 returns since 1950. And this has typically been followed by a very strong November and December based on past performance. So here we can see in this one chart that October, if we look at since 1950, the returns have been like maybe 2%, but then they doubled that, as the election was behind us. Now here's another look on average how October is historically not only not so good month performance-wise, but also a very volatile month during election years based off of S&P 500 returns since 1950, but once again followed by strong November and December past performances. And many will say that that's because the market hates uncertainty. And as we'll see in a little while, we have two very divergent candidates here with two very divergent platforms. And for businesses and investors to decide what to do is very difficult right now because the outcome can be very different from where we are today. So the predicted two-party vote and the actual two-party vote have historically shown similar results, which can show that this election may be closer than what many polls suggest. Now, we're also often asked if stocks perform better under a Republican or Democratic president. And we take maybe a different angle and point out that stocks have tended to do their very best when we have a split Congress. Markets tend to like checks and balances to make sure one party doesn't have too much sway or influence or control. When Republicans have controlled both chambers in Washington, on average, the S&P 500 has gained 13.4% per year, and the GDP has grown by 3%. However, when the Democrats have controlled both the House of Representatives and the Senate, the economy did a little better with GDP growth of 3.3%. However, the S&P 500 was only up 10.7% on average. Now, contrary, when we've had a split Congress, the average S&P 500 gain climbed to 17.2%, while GDP growth averaged 2.8%. And this again suggests that markets may prefer a split power arrangement come November, again, as this chart shows. Now, as we can see, candidate Biden's platform supports green energy, an increase in infrastructure spending, a trade policy in emerging markets such as China, and to an extent, developed international countries such as Germany when it comes to trade and regulations. He's also very strong on regulation of firearms. And in addition, the Biden presidency may push forward reform immigration and illicit marijuana legalization laws. How stocks perform the 3 months ahead of the election has delivered a solid track record of deciding who will be in the White House the next January. The S&P 500 has predicted every presidential election winner since 1984 and 87% of the winners since 1928, with stocks favoring the incumbent party if stocks are higher in the 3-month period before the election. Now, as this chart shows, if stocks sell off well ahead of the election, the opposition party has tended to win and the incumbent party has lost. Some surveys suggest that approval ratings for presidents play an important role in the presidential term concerning re-election. Now, with an approval rating of less than 50% for the current president, this may play in favor of presidential candidate Joe Biden. Presidential candidate Biden is proposing higher taxes, focusing on higher net income individuals and corporations. So really big jumps could be in the cards. This, under a Biden presidency, the US would have the largest tax increase since Lyndon Johnson, who raised taxes significantly in 1968 to fund the Vietnam War. Even with the proposed increased taxes, presidential candidate Biden is saying that increased spending in these areas equaling $7 trillion should hope to fend off or balance off the significantly increased tax rates. So considering the increased tax proposals from President candidate Joe Biden, this may potentially reduce earnings or EPS, earnings per share, for S&P 500 companies due to both higher corporate tax rates and, secondly, increased regulations. Now, many fear a Democratic sweep and look at it as a big worry, but history would say this isn't as much of a worry as some may think that it is, as stocks have done, at least from a stock market perspective, because they have done quite well under this scenario. And we can see some examples here of when Democrats had both the presidency as well as as Congress. Now, again, we mentioned how stocks perform the 3 months ahead of the election has delivered a solid track record of deciding who will be in the White House. The S&P 500 has predicted every presidential election winner since 1984, and again, 87% of the winners since 1928. Now, as these charts show, if stocks sell off ahead of the election, the opposition party has tended to win, and the incumbent party has tended to lose. We mentioned presidential candidate Joe Biden's platform. President Donald Trump's platform supports increased energy production, defense and aerospace, deregulation for financials, materials, technology, and education. Now we see that higher incomes help presidents win re-election. And if the real per capita disposable income growth can be a significant role in a winning campaign. And as we can see here, Trump is higher up on the list there with Reagan, Johnson, and Nixon. How stocks again performed 3 months ahead of the election have delivered this solid track record of deciding who will be in the White House. The S&P has predicted every presidential winner since '84 and 87% since '28, with, again, stocks favoring the incumbent party if those stocks are higher in the 3-month period before the election. Now, as this chart shows, if stocks again sell off ahead of the election, the opposition party has tended to win and the incumbent party has tended to lose. Historically, stocks have about twice the amount of gains if the incumbent party wins. And how the economy is doing has a nice track record for how the president, and if the president will be reelected or not. And you can see down there that kind of question mark where it says recession. And the other piece is that's kind of nebulous there too is, typical recessions are aligned with economic recessions, where this recession, I would say most people feel, is more a result of the COVID-19 pandemic and not because of any, I'll say, failed economic policy. So again, how the economy is doing has a nice track record for how the president will be reelected or not. In fact, it's been right every year, again, since 1984. This chart, again, shows if stocks sell off ahead of the election, the opposition party has tended to win and the incumbent party has lost. So I think one of the things that's going to be significant here is how much voters attest the recent economic pullback to failed economic policy, or is it merely a function of COVID-19? So how much are voters willing to overlook COVID-19 when evaluating where they think the economy and the markets will be going forward? So given how the dollar is doing, not only the markets and the economy, but how the dollar is doing 3 months prior to election may be able to predict the president. Given a strong dollar, it may hurt the incumbent party's chance for re-election. And in fact, this has been correct 7 of the last 8 times. And again, stocks have traditionally been historically stronger on average if the incumbent party wins re-election. So thank you for viewing this with me. I'm going to show you real quickly here how to access my YouTube channel. You can see right here, this is my website, BryantSikorsky.com. And right here, we have my Facebook, LinkedIn, Twitter, and YouTube channels. And if you click on this where it says YouTube, it'll take you to my YouTube channel. And you can see, if you click on videos, you can see all of the videos that I've recorded. Now, this one is not, the one we just did here is not in here yet. I'll put it in this afternoon. So if you want to go back and re-watch this presentation, then just go to my YouTube channel and click here, and you'll be able to watch it at your convenience. So with that, I'll say thank you very much. I hope you have a great rest of your day, and this will be kind of interesting to see which of these predictions turns out to be correct or not. Thanks.